Welcome back, all you capitalist pigs. My name's Jason, and this is the Forex Market Preview. If you're brand new, thank you so much for coming by. I really appreciate you guys taking the time to watch my free stuff, and I hope that you guys register so that you can get this direct to your inbox every single day. I got a really rockin' cool video to give you as well, a training video on trading, which is well worth your money since you're not paying a dime for it. I would dare to say it's worth twice your money. But unlike most days, for those of you who are returning, one of you, the over 70,000 of you who've signed up to receive this video, unlike most weeks when we come in here, I don't have a lot I really like on the ratio side of the house. I've got a couple of things that I'm watching, and we're going to talk about that, and then I decided I'd pull over something, and I don't mean to be like teasery when I talk about this. That's my George Bush for you, my strategeries. I don't want to be teasery with you when it comes to the syndicate. I want you guys to be part of it if you want to, but I'm going to show you guys something that the syndicate's been watching and the trade that we're involved with, because it just goes to show you how powerful just some basic understanding of technical analysis can be. But let's take a look here first at the pound dollar. And what's happened here is, this is a pretty good explanation or showcase of ratios and the power of harmonics and the power of harmonics. You can see the harmonic moves here, and then of course the last one was completing basically right here. And what's interesting here is it was coming into this support level, as you can see. Look at that, how strong that support level was. Very, very strong. Pretty good counter trend trading opportunity as the market's trending down. If you're looking to get on board the underlying trend, well, good grief, take a look at that. Huge move up, just a shelf that the market is sitting on there. Well, boom, what just happened? We're on a 4-hour chart, and we just saw the market not only break below, so put in a lower low, but also put in a lower close, because here's the lowest low right there. And we closed below that. Actually, it doesn't matter. I want to put it there. It doesn't matter. We closed below it. And now what I'm waiting for here, this is actually going to be a pretty nice trade setup because it should give us a very, very nice risk-reward profile. But what I'm going to look for here is for the market to pull back up into this zone, around 156.62. Right along that support level. And if it does, if it pulls back up in there and does one of these boys back up into that area, I'm going to look to be a seller. Now, the great thing about this is look at where the last swing high is. It's right there. So we can be just above that swing high. Shoot, we could even be bring in our ratio here and just say, well, hey, I'm going to put my stop, just below or just above the 618, kind of eyeball it there. And because what I would expect is this market to pull back up into here, and again, nothing saying that it will, that would be highly likely now, or probable, since the market has broken structure here, that we would rally back up into previous structure support, which should now become resistance, and then roll over. And where are we going to go? Let's look. Where are we going to go? Where's our next structure, support, and resistance level? Look at how far we can fall, guys. At least here. That's a minor level. And then you've got also this level here, this level here. If I invert the last leg of the move, which is this down leg or this upward leg, and I bring in my Fibonacci extension, you're going to see that 127 extension coming in right along that support level we're watching. You've got a 1414 right around here, and actually if we bring this back up, the 1618, and we drop a line in here, right near the 1618, you're going to see support, and then a couple of areas where it was violated but still kind of holding that ridge line. So you're going to have not only Fibonacci, but also some structure levels all along as the market declines. And there's going to be excellent places for you to take profits, to cover portions of your position. But when you start looking at this in terms of risk reward, what are you risking? Well, if all you did was buy them on a limit, if you just put your limit orders right there to buy, well, there's your risk. your reward is about 1.5 to 1 or so. 1.5 to 1 risk reward profile to your first target or to your place where you're going to trail your stops. So lots of opportunity here on the pound if we see the retracement that I think we're going to see. And again, then if the market breaks above those highs, break above, close above, you just exit out of the position, you take a small loss, and you move on. Now let us move on. Take a look at the euro. Everyone's wondering about the euro. Had a big head fake here. I put this out in the syndicate and kind of got skunked, man. The trading gods are keeping me honest with this, keeping me humble. Because what we saw was a break of structure here. Look at what happened. Market was in a downward move. Okay. Boom. Looking beautiful. New structure lows. Then what happens? Boom. Break above, close above. Market violates the highs. We come back down in, retest the support. Now, I'm going to teach you guys a trick, and those of you who are syndicate members are going to get this. I'm going to drop this down to a 60-minute chart. There is a method for entering these trades to the high side, or in the trend continuation. For example, if this market is pulling back like this, and guys, this you can use this so many different ways. Okay, so if you don't understand the trend continuation model that I'm teaching here because you haven't been through a pro trader course or you haven't been part of the syndicate and attended some of the trainings that I give, don't worry about it. This is applicable in other areas. But if we're watching this support level after the market breaks structure and we're looking for the market to come back down in there as a place to get long, you can buy them on a limit. Buy them on a buy limit orders, and so when the market touches 132.27, you'll get long. But look at what happens sometimes. Sometimes the market just crashes and just falls off a cliff, which is what it did here. If you use a higher high, higher close approach to this, then you can stay out of a lot of this problem. It doesn't work all the time, but it works really, really well. So for example, I'm going to take the lowest low, which is right here, as the market declines. Okay? That's the lowest low right there. Now on that candle, where's the high? The high is right here. That means in order for me to get long in this market, I will need to see a break above, close above the high of the lowest low. So in this candle. And so in this case, the market declined, then we traded sideways. We never got a break above, close above that high. Traded inside candle, inside candle, inside candle of this move. Until finally, it broke to the downside. And then what happened? Well, it was just a waterfall after that. Just straight down. If you were using this approach, you would have never gotten long this trade. If you were buying on a limit order, this just would have been a loss. Now, it's not that one's right and one's wrong, because what will happen, traders, is they say, well, I'm going to wait for the confirmation. And then what will happen is the confirmation candle will look like this. This will be the high, this will be the low, and it'll be a candle that looks something like this. And you'll say to yourself, well, I just missed a 100 pip move or a 50 pip move because I didn't enter on a limit order. There will always be something that will make you angry and will not look right and will frustrate you and make you feel like you're doing something wrong and you're missing moves and all that type of stuff. What I would caution you against is making your decisions based on the outcome of the last trade. You got to do some testing, you got to take a look at it, and you got to say, okay, over the last 50 or 60 trades where this particular setup occurred, what produced the best result? And then by doing that, one of the other things that would have happened here is if, for example, let's say, for example, we had done exactly what I talked about, okay? And we had decided that we were not going to get long until the market had broken above this high, okay? And then the market does break above this high. And let me just enter bar tick replay mode, so because some of you may be getting confused with this, and I don't want you to. Okay. So let's say, for example, that this candle, the market broke to the upside and we had a break above, close above. Where do your stops need to go? Look at that. Right underneath that low, don't they? Because now the market has given you its intention. It's moved up. It's broken that candle. It has an intention. We've got support here that's validating what we're thinking. We thought that the market would find support here based on previous structure resistance. The market comes down in, and in that same zone, it finds that support and rallies break above, close above that candle. Now we know our stops can go right below their very close, tight protective stop. There's a lot of advantages to that. So consider that, guys, when you're looking at these trading ideas and looking at what I'm talking about, because there are certainly some serious advantages to waiting for that confirmation. Last one I'll talk about today that I'm watching is euro yen. Excuse me. Looking for a potential double top here. This is a CTS. This is a CTS trade. And those of you who have not been through the Pro Trader course but are syndicate members, I'm going to be teaching on CTS this week. I'll have some information out to you about how you register for that, but I'm going to be doing a closed-door training for you guys on that. But you can see kind of a little resistance, support, and then, you know, this is really weak back here. But, I mean, even if we just take most recent, the market's found resistance there. There's previous resistance here. If the market double tops here and holds, you've got a potential sell or a potential 2618 trade. If the market does double top, you know, comes back up in here and then breaks structure, there's going to be an opportunity on a retest to go ahead and look to get short. So anyway, be watching for that double top, potential shorting opportunities. In addition, if you know the 2618 trade, you can do that. And hey, Darren, do we have a link to, actually we have the 2618 trade recorded, don't we? Can you drop me that link, and then we can post that for people who want it? If you guys want to learn about the 2618 trade, you can. Last thing I'll talk about is a syndicate member trade. This is the Aussie dollar trade. We got short back here at 106.57. Now trading at, hang on just a minute. All right, sorry about that. No, you guys were gone for only seconds, but I was gone for a while. I've been dealing with some money management stuff. But we've got here on this resistance level, 106.57 was what we ID'd, and we sold them almost right at that line. And what we were looking at, guys, of course, on the 60-minute chart, was the market breaking structure here. Boom, breaking down. And we've got, if you take this out, you can see kind of a wall of support that the market sat on here. And when the market broke that support, we watched the market retrace back up into that resistance level. And we were actually looking at this, I think, on the 4-hour chart, if I remember right. Those of you syndicate members will know better than me. But you can see the shelf that we were sitting on here. And I said, well, that's either right here at the 382, or this actually retraced into the 50%. And we were looking for the place to get short. Well, back out on the 60-minute chart, looking for your entry. You take a look at the low, boom, that's the highest high. Again, you can use this the same way. You can sell them on a limit, which would have worked in this case, or you could take, that was the high water mark, so you're going to wait for a break below, close below that candle, which means you would have got involved in the trade right here, right there. Market rolls over, we get up money, everybody's excited, then the market retraces, then everybody's sad, we double top. Market pulls back, we triple top, then the market nosedives. Boom, 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 boom. All the way over the end of the week, we closed up significantly. We broke structure again to the downside if we're just looking at our structure levels. Broke structure to the downside again. Guys, this is all about just watching support and resistance. Just watch the support and resistance. Okay? So we break structure, market continues to roll, we close just below that structure level, and then boom, the market has rolled over. Now we're looking left, and we see what? Here's the previous structure support level. There's the lowest low. Break below, close below. Boom, everything's moving just as we anticipated it would. We're looking for a move down into 103.56. That would be an ABCD pattern at a 1414. We're going to collapse the chart up, and we're also going to see some support and resistance back here as well. Look at that line right there that the market was sitting on. We're going to look at potentially moving back down into that as we come into those lows. And guys, this, while it might seem incredibly complicated, is so simple. It's so simple. It doesn't require that you be able to, draw in a bunch of Fibonacci retracements and extensions and do all kinds of fancy pattern formations. We do that, and Akil in the live trading room is going to show you just how simple it can be to draw a Gartley pattern and to day trade this type of pattern formation, and how profitable. Do I need to mention again the 24% that he was able to return last month in the live trading room? Pretty exceptional. This can be done on lower time frames, higher time frames, it doesn't matter. But what you've got to make sure of, what you have to continue to do is trade the plan consistently. And what you'll see here is that the longer you're with us, the more you're going to see every week it's the same. We're looking for structure, support, and resistance. We're looking for good places to either get with the trend or take high probability counter trend trades. So guys, until next time, good luck and good trading. I'll see you back here next week. Again, if it's the first time you're visiting, thank you so very much. Take a look at the syndicate. Live trading room, guys. If you've got time during the day, if you're looking for a way to build on your skill, the live trading room is the place. And, of course, if you are interested in seeing more about and hearing more from me and more from Akil about what's going on in the week and trades we're looking at, well, then the syndicate's for you. So until next time, guys, good luck and good trading. I'll talk to you soon.